Imagine cities going dark, flights pausing, factories falling silent, and governments trembling. Now imagine all of that triggered by a single thing: oil. Oil powers ships, plastics, fertilizers, roads, and the jets above our heads. Before oil, societies relied on muscle, wood, wind, water, and coal for energy. Coal transformed nations, powering the Industrial Revolution and reshaping industry and warfare. But coal was bulky and hard to move, creating limits for a rapidly changing world. In 1859 Pennsylvania, commercial drilling signaled petroleum's arrival as an industrial resource. Early demand focused on kerosene, bringing better lighting into homes and cities. Then the internal combustion engine arrived and everything began to change. Cars, planes, tanks, ships, and industry all became more efficient with petroleum products. Oil was lighter, more energy-dense, and more adaptable than earlier fuels. Oil arrived as the world industrialized, trade expanded, and militaries modernized. Petroleum became embedded in plastics, textiles, paints, pharmaceuticals, and electronics production. Control of oil meant control of transport and, by extension, trade and industry. Suddenly, oil-rich land became geopolitically priceless and strategically vital. Companies consolidated refineries, pipelines, and shipping into global oil empires. Oil wealth fed banks, traders, sovereign funds, and global financial markets. In some places, oil financed highways, airports, hospitals, and rapid modernization. But large oil revenues can weaken institutions and reduce government accountability. When oil prices swing, budgets boom or break, and politics can unravel quickly. Modern militaries rely on petroleum, making oil a strategic prize worth defending and contesting. A single choke point or regional conflict can send shockwaves through global markets. Oil markets respond to fear, rumors, and expectations as much as to supply data. The 1970s oil shock showed how reliant advanced economies were on cheap petroleum. High oil prices contributed to stagnation plus inflation, challenging economic orthodoxy. Governments built strategic reserves, promoted efficiency, and sought alternative energy pathways. Oil revenues flowed into global finance, shaping currency flows, investments, and sovereign funds. Producers invested massively during booms and cut back sharply during downturns, creating cycles. Oil wealth can create prosperity and also corruption, inequality, and weak institutions. When states rely on resource rents instead of broad taxation, accountability often erodes. Some countries managed oil wealth through transparency, sovereign funds, and long-term planning. Oil hides in everyday items: plastics, fabrics, packaging, and countless products. Modern agriculture depends on diesel machinery and petroleum-based fertilizers. Medical supplies and electronics often trace back to petrochemical feedstocks derived from oil. Supply chains and logistics rely on petroleum for movement and packaging across long distances. Replacing oil means reconfiguring transport, grids, industry, and consumer habits simultaneously. Oil price moves are driven by fundamentals and the psychology of expectation and fear. Price swings create winners in importing countries and losers among producing regions, or vice versa. Announcements by producers and producers groups can swiftly alter global expectations and prices. Burning and extracting oil releases greenhouse gases and local pollution with serious consequences. Climate politics reframes oil from a purely economic asset into an environmental problem. Companies experiment with low-carbon fuels, carbon capture, and diversified energy portfolios. Electric vehicles, renewables, and batteries are scaling, changing the energy landscape gradually. But aviation, shipping, and petrochemicals remain difficult to decarbonize in the near term. Policymakers juggle inflation control, growth, energy security, and climate obligations simultaneously. Behind every barrel lies a human story of jobs, families, and livelihoods. Extraction can damage local environments, health, and traditional livelihoods near production sites. Oil booms draw workers to cities and can push people into precarious migration when busts follow. Securing pipelines, refineries, and shipping lanes becomes a national security imperative. Global energy access remains unequal even as oil shapes wealth for some and scarcity for others. Boomtowns sprout quickly around discoveries, bringing wealth and social tension in equal measure. When oil revenue falls, debt burdens rise and budgets tighten, increasing political risk. The oil economy links producing regions, refiners, shippers, and consuming cities across continents. Refineries are complex, capital-intensive hubs that refine crude into multiple essential products. Outages, shipping accidents, and blockades can instantly tighten markets and spike prices. Strategic reserves act as buffers, but cannot fully substitute steady production and supply chains. Long-term investments depend on price expectations that can shift with policy, tech, and geopolitics. Advances in drilling, seismic imaging, and offshore engineering expanded recoverable reserves dramatically. Shale and unconventional sources altered supply dynamics and global price structures. Global benchmarks knit regional markets into a single, fast-moving global oil market. Consumers feel oil price shifts immediately through transport and food price changes. Producers can collapse into austerity and unrest when revenues dry up suddenly. Adaptation includes efficiency, electrification of transport, and resilient agricultural practices. The future will likely see coexistence, new systems and old oil infrastructure side by side. Some companies and countries will profit from transition while others face dislocation. Energy transitions are intensely political, producing winners, losers, and heated debate. Different countries face different transition capacities, creating global inequities and tensions. Technological breakthroughs could accelerate change, but uncertainty about timing remains critical. Investors increasingly weigh climate risk and may change capital flows away from fossil fuels. Policy tools like carbon pricing, subsidies, and regulation shape the pace of oil demand decline. Cultural and behavioral changes in transport and consumption reduce oil dependence incrementally. Producers face strategic choices: extract now, manage decline, or invest for a low-carbon future. Existing infrastructure creates path dependence that slows rapid abandonment of oil systems. Public expectations funded by oil revenues complicate social contracts during transitions. Diversification requires long-term investment in education, infrastructure, and new industries. Resilience depends on retraining, small business support, and social safety nets during economic shifts. Global negotiations juggle energy security, climate goals, and economic fairness between nations. Technology transfer and finance are essential to enable equitable transitions worldwide. Even as renewables grow, oil's footprint will linger in hard-to-decarbonize sectors for years. Everyday consumer and planning choices cumulatively influence oil demand and transition speed. The oil economy is a mosaic of personal stories shaped by markets, policy, and chance. Debates over sovereignty, development, and climate justice complicate simple narratives about oil. Realpolitik around oil blends strategic interests, diplomacy, and sometimes covert action. Markets build tools, hedging derivatives, sovereign funds, to manage oil's volatility, not eliminate it. Over a century, oil reorganized transport, industry, finance, and geopolitics around itself. Transitions are messy and uneven, full of stalled projects and unexpected winners. Policy must combine climate action with social protection to enable just transitions. Individual choices and local activism can catalyze broader shifts in energy systems. Oil shocks ripple through food, transport, finance, and political stability in interconnected ways. Younger generations inherit a world where oil's legacy and climate imperatives collide unpredictably. Understanding oil is essential because it explains much of how the modern world operates and falters. Behind economic graphs are real people whose lives rise and fall with oil's fortunes. Oil is not just a commodity, but a force that built empires, shaped borders, and altered lives. The central question remains: how do we transition away from the very resource that built modernity? There are no easy answers, only hard choices balancing security, prosperity, and climate responsibility. For as long as oil matters, the world will move with it, and our choices now will shape what follows.